Good day, viewers, and welcome to EduTop Scholar, our YouTube page. If you haven't subscribed, make sure you click on the subscribe button and also share with your friends. So today we will be dealing with ACC 111, Principles of Accounting 1, past questions for 2022/2023. We have about 6 questions and we'll be dealing with them one after the other. And to answer these questions, we'll be dealing with them in the exam mode. How you can answer these questions for exam purpose. So for number 1, this is the question. The question says, financial transactions are first recorded in the books of prime entry, otherwise called books of original entry. Identify these books and explain their uses. Quite simple. There are about 6 books of original entry, and these 6 books of original entry, why are they called books of original entry or books of prime entry? They are called books of prime entry because they are the first place any financial transactions of a business are recorded. That is why they are called original entry. They are the first place any transaction of any business are first recorded. And we have about 6 of them. We'll be listing them for exam purpose. Make it simple and make it very clear for your examiner. So number 1, we have the sales day book. We have the sales day book, or you can call it sales journal. We have the sales day book or the sales journal. And what is the use of a sales day book? A sales day book is primarily used to record credit transactions, credit sales. Credit sales. So a sales day book is primarily used to record credit sales. For exam purpose, all you need to do is just to let your examiner know that a sales day book is used to record credit sales. If you do this, you have your full mark. Then the second one is the purchase day book, purchases day book, or the purchases journal. This is the second one. You have the purchases day book or the purchases journal. Your purchases day book also has similar function as the sales day book, and the primary function of the purchases day book is to record credit purchases. Credit purchases are goods you bought on credit from a customer. For instance, we sell books, or say we sell calculator, and we bought goods on credit from one of our customers or our suppliers. Such transactions will not be recorded in any other book. It will first be recorded in our purchases day book. The same thing with sales day book. When you sell goods to a customer, the first place of entry of such transaction is in the sales day book. No other place. That is why they are called books of original entry. The first place where those transactions land is called the sales day book, the purchases day book. Number 3, we have the returns inward journal. The returns inward journal. It is also, or it can also be referred to as sales return journal or sales returns day book, whichever you would like to call it. The returns inward journal or the sales return journal, whichever you would like to call it. What are these books used to record? They are used to record goods sold to customers which were returned to us. For instance, we sell calculators, and in a pack of calculator we have about 30 pieces. Out of the 30 pieces that we sold, about 5 of them were not working well. So the customer returned 5 of them to us. The first book of transaction where that transaction will be recorded will be the returns inward journal. So in exam purpose, when you are asked this kind of question, the returns inward journal or the sales return journal, the primary function of it is to record goods returned by customers to the business. That is the primary purpose of the returns inward journal. You can call it returns inward journal. It can also be called sales return journal. It can also be called returns inward day book. It can also be called sales returns day book, whichever you like to write. So the next one is the returns outward journal. The returns outward journal. You can also call it the returns outward day book, or the purchases return day book, or the purchases return journal, whichever you want. Its function or its use is also the same as or similar to returns inward day book, which means it can be used to record, or it is used to record goods returned to our suppliers. So like the example I also gave, if we bought something from our suppliers and then part of those items were bad or were faulty and we returned them back to the suppliers, such transaction will be recorded in our returns outward journal or returns outward day book. The next is the cash book. And just like the name implies, it is used to record cash transactions. Essentially, what the cash book records is basically cash transactions. It's the opposite of what the sales day book or the purchase day book records, because this one has to do with credit transactions, that is transactions without immediate payments, but the cash book deals with transactions where immediate payments were made. Cash book. So it can be a single column cash book or a double column cash book or a triple column cash book. Those are the 3 types of cash book we have, but essentially what it is used for is to record cash transactions. Then the last one, or the 6th one, is the general journal. The general journal. The general journal can be called the journal proper or the general journal, and it has so many functions, but part of the functions is that it is used for correction of errors. So general journal or the journal proper serves the function or is used for correction of errors in any of these books. So when there is any error or any error occurs in our books, the general journal serves the purpose of correction of errors in any of these books. So for exam purpose, if you can highlight all of this: sales day book, purchase day book, returns inward journal or returns inward day book, the returns outward journal or the returns outward day book, the cash book, and the general journal. With one of these functions each, you are fine. You will get your full mark. So the question 2 here says that Mr. Bayeshigba commences business on January 1, 2021 by transferring 720,000 naira from his private account into a bank account which he had opened for the business. His transactions for the month of January 2020 were as follows. So this is a 3-column cash book question, and when you have a 3-column cash book question in your exam, there are some principles that you need to note. The basic principle of double entry and also the principle of debit the receiver and credit the giver. So you need to note this, and also note the principle of double entry, that for every debit entry there must be a corresponding credit entry and vice versa. So when you have a debit entry, it means that of necessity there must also be a credit entry of that same transaction. Maybe not in this book, but it must also have a corresponding credit entry in another book. So for this purpose now, they said Mr. Baye Shegba commences business on January 1, 2021. One thing that is important to note is that for every transaction, it will require two parties. First thing you need to do is to identify the two parties related to that transaction. And when you identify those two parties, the question is half solved. So first, we know that Mr. Baye Shegba is the owner of this business, and he puts his own money into the business. And to record such a thing, we know that any money that is used to start a business is called capital. So we know that he invested his capital into the business. And this transaction, you need to identify who the receiver is and who the giver is. So Mr. Baye Shegba puts money into the business, and for cash book purpose, such a transaction will be recorded on the debit side. Why is it recorded on the debit side? Because Mr. Baye Shegba puts money into the business. So the business receives money. So and when the business we are working with is the receiver in any case, then it comes to the debit side. So don't stress, don't panic when you have any capital in your question. When you read the question and you find out that it is a capital and you are working on either a single column, a double column, or a 3-column cash book, just bring such transaction that you have identified to be capital to the debit side. So in this case, Mr. Baye Shegba brought money into the business. The business here is the receiver. So we are going to record it in the debit side. So on what date? They said January 1. So we can record it as January 01. That is our date. And for the particulars, we have capital, because that is what he brought into the business. For the folio, you might not need to write anything in your folio. And what did he bring into the business? He transferred money, which was 720,000 naira, to the account of the business. It means the money did not come as cash. It came into the business bank account. So we are not going to be recording it in cash. It will be recorded as a bank receipt. So we have, don't forget all of this. They are very important. The Naira sign, because you are working with Naira. Any currency you are given must be written in your cash and bank columns, and also the discount column, to show that you are working in that particular currency. Every item written here carries mark. So please don't forget the name of the owner, the name of the business, what you are doing, 3-column cash book for January, and all of this, they carry their own mark. So we've said that it is capital, and he brought in the capital on January 1, 2021. So how much was the money that was transferred into the bank account? They said 720,000 naira, and it goes straight to the bank. So for the next one, they said on that same January 1, he bought goods on credit from Yakubu for 120,000 naira. So this is quite simple, because we are working on a 3-column cash book, and what the cash book primarily does is to record cash transactions, nothing more and nothing less. So, and here we were told that on that January 1st, he bought goods on credit from Yakubu. It means that for goods bought on credit, they don't come to the cash book. They don't come to the cash book because the cash book records only cash transactions. So this January 1 transaction where you bought goods on credit from Yakubu will not come into this account because it is, or the goods were bought on credit. So this transaction now will go to the purchases day book that we talked about in the number one question. So this transaction will not be brought into this account because it is a credit transaction. Number 2, the January 2 transaction says that he withdrew cash from the bank for office use. It says he withdrew cash from bank for the office use. These kind of transactions they are transactions that you should be very careful with because they are called contra entries. Because when he took money from the bank, he did not use it for any external purpose or personal purpose. These kind of transactions can come in 2 ways. Either he uses the money he withdrew for personal use, or he uses the money for the sake of the business. So when he uses the money for the business, it means the money is still retained in the business. And any money that does not go out of the business will not be recorded on the credit side, neither will it be recorded on the debit side, because the money is still for the purpose of the business. So these kind of transactions are called contra entries, which means that they will be recorded on both sides of the account because money is neither going out or coming in. Why? Because the money that was withdrawn was used for the purpose of the business. The money is still retained in the business. The money was not spent for a personal purpose or for any purpose that was not or that is external to the business. So this January 2 transaction says he withdrew cash from bank for office use, is 18,000 rand. So we've explained that it is a contra entry, and this is the way contra entries are recorded. I said they are recorded on both sides of the account. So January 2, it will be recorded here on the bank side as bank, the particulars of the bank. You can omit the folio, but when you write the bank here, then the money has to come to cash. Then for the folio, you can write to identify that it is a contra entry. It can be written as C. That is contra, to represent that it is contra. The money, when it is recorded under bank, will come to cash as an income. So for the other side, for the other entry, you come and record it the same way, January 2. Because you have recorded here as bank, you would write it here as cash. Because the money is still retained in the business. Cash with the same thing, contra, C. Then because you have written cash here, it will go to the bank side of the credit. And that's all. So the next one says, January 3, he sold goods on credit to Dada. This is also very clear. Anytime you see that it is a credit transaction, it means money was not exchanged. Cash was not exchanged. So it doesn't come to this book because this book only records cash transactions. So they said January 3, he sold goods on credit, 150,000 naira to Dada. It means it will not come into this account because it does not involve exchange of cash. Then the next one says January 4, he bought goods on credit from Bashiru. This will also not come into this account because it is a credit transaction. Anytime you see credit transactions, they don't appear in the cash book because there was no exchange of cash. January 6, it says sold goods to Okechukwu on credit also. This will not also be recorded here because it is a credit transaction. It will be recorded in the sales day book or the sales journal because he sold goods on credit. Then January 7, it says he paid rent by cash of 2,500 naira. So this will be recorded because it involves a cash transaction. There was exchange of money. So we are going to be recording it in the cash book. They said he paid rent by cash. And when you see this kind of transaction, all you need to do is to identify who the giver is and who the receiver is. In this case, the business is the giver because it took money out of the business and paid rent. The money did not come into the business, but the money left the business. So the business in this case is the giver because we are paying rent, we are taking money out of the business, and the business is giving out money. So which means it will be recorded on the credit side, and this is the credit side. So we record it as January 7 because we paid rent. So our particulars will be rent. And how did he pay it? Did he pay by cash or he paid by bank? They said he paid rent by cash. So it's going to be recorded on the cash side for 2,500 naira. Very simple and very clear. So in your exams, if you ask this kind of question, all you need to do is to identify whether it was we had the giver or we are the receiver in this case. When we are the giver, you record on the credit side, and when we are the receiver, you record on the debit side. So January 9, he withdrew cash from bank for personal use. I've explained this earlier. This will not be a contra entry because when he took money from the business, he used it for personal purpose. When he took money from the business, he withdrew it and used it for personal purpose. The money is not retained in the business. The money has been taken outside of the business for personal use. So they said he withdrew cash from office for personal use, and which is recorded as 3,000 naira. So he took money. So because in this case, money is going out of the business. The money is not within the business. He didn't spend the money on the business, whether to purchase an item of goods or to purchase furniture or to purchase something that will be used within the business. He took this money for his own personal use, which means that in this case, the business is giving out. And we said that whenever the business is giving out money, cash transactions, the business will be credited. In this case, the money is going out of the business, so it won't be a contra entry. So identify whether we are the giver or the receiver, and that will determine where that transaction will be recorded. So here, the money is going out of the business. That is January 9. In this case, because the money is going out of the business, and what will be the particulars? We'll call it drawings. In this case, he took money outside, he took money from the business and used it for personal things. Maybe for any purpose, he can use it to pay his children's school fees, he can use it to do anything. But when you find out that the money that was withdrawn from the business was used for any personal thing, he could have used it to purchase a car, he could have used it to do anything. It is still on the credit side and it will be recorded as drawings. So when you have that drawings, and because he withdrew cash from the office, so because it was cash he withdrew, it will be recorded on the cash side as 3,000 naira. 3,000 naira. So we move to the next one. January 10, he bought goods from Bamigbo on credit. Like I said, whenever we have anything on credit, it will not come to this account because this account primarily deals with cash transactions. So January 10, goods bought from Bamigbo on credit for 100,000 naira will not be recorded in this account. So the next one says on January 12, goods returned by Dauda, which is 17,000 naira. Because there is a book that is meant to record returns inward or returns outward. So it means that this book will not show, or this kind of transaction will not be reflected in the cash book, and it will be taken to the returns inward journal or the sales return journal. So we can move to the next. The next one says on January 14, cash purchases from Ekula paid by check. It said cash purchases from Ekpula was paid by check 40,000 naira. So because we purchased items, in this case I said we need to identify whether we are the receiver or we are the giver. And when we purchase goods, it means that we expend cash. Money leaves our hand. Money leaves the business. And when you identify that money leaves the business, you are going to be recording it on the credit side, which means we are the giver. So when you see purchases and you are working on a cash book, it is quite simple. You record on the credit side, because in any case, when there is a cash or bank purchases, it means that money is leaving the business. You are paying money in exchange for the goods you are receiving. So January 14, because we bought it cash purchases from, and the name of the person we bought it from was given to us, Ekpula. And because it was paid by check, which means it was going to withdraw it from the bank, we are going to record it on the bank side, 40,000 naira. So the next one, we still have January 15, and January 15 says that cost of goods that were taken for private use. It is similar to this because it is drawings also. It means it took goods from the business. For instance, we sell books or we sell exercise books, and for the sake of the business, we took maybe one exercise book to record transactions. So, or we took that book and gave it to the son of the owner of the business. It has been taken out. The cost of that book will be recorded as drawings because money was taken or goods were taken by the owner of the business for his own personal use. It will also be recorded as drawings. So on January 15, we have drawings. It will be recorded 5,000 naira under cash because it was a cash transaction. So we move to the next, January 16. It says goods returned by Okechukwu, 20,000 naira. In this case, we already know that any time we have goods returned or we return goods to our suppliers, they will not come to the cash book. Then January 17, sold goods to Akinlolu, giving a discount of 10%. That's January 17. In this case, we sold goods and it was not on credit. We sold goods and we received money, we received cash. But while we received cash, we gave a 10% discount. So, like I said, first of all, identify in any case, in any question, whether we are the giver or the receiver. In this case, when you sell goods, you receive cash, you receive money in return. Goods leave you and then money returns to you. So, and that is what we need to identify for this kind of accounts because it is a cash book. We are receiving cash. So for January 17, we sold goods, and when we receive money, we debit ourselves. We debit the account. So we have January 17 on the debit side. Akinlolu. So we said we sold goods to Akinlolu, but it was stated here that we gave Akinlolu a 10% discount even before he paid this 20,000 naira. So we are not going to be recording that 20,000 naira in this account because we were told that we gave him a 10% discount. So if you calculate 10% of 20,000 naira, it will give you 2,000 naira, which is the discount that we gave Akinlolu. So we are going to record the 2,000 naira discount we gave to Akinlolu as a discount allowed entry in our books. And then, which means after he has paid the 2,000, we have deducted the 2,000 naira from the amount he was supposed to pay, we will have 18,000 naira left, which is what we are going to be recording in our books. 18,000 naira. Why? Because he was given a 10% discount, which amounts to 2,000 naira, and the 2,000 naira will be recorded under the discount allowed. So in any case, when you have discounts given to a customer, you calculate the percentage of the discount on the amount that was given, and you record it under the discount allowed, and the rest of the money will be recorded either in bank or in cash. So the next one says that January 18, we received check from Okechukwu after deducting a discount of 5%. It says we received check, that is, we received money into our bank from Okechukwu after deducting a discount of 5%, and it amounted to 95,000 naira. So when in that case, we know that whenever we receive money, we are the receiver, we are to record on the debit side. So we have January 28th, January 18, date is January 18, because we received money from Okechukwu. This transaction involves discount. So he paid 95,000 naira, and they told us that this 95,000 naira he paid was after a discount of 5% has been given to him. So the money was 100%, and we gave him 5%. It means this amount that was given to us is 95% of the total amount. Is 95%. So there was a 5% discount that was given. So we have to know what the 100% of the amount is before we can deduct the 5%, so that we can know how much the discount was. And for us to do so, we're given as 95,000. So what we'll basically do is to record 110 divided by 100 multiplied by 95,000. 100 divided by 110 multiplied by 95,000 is what will give us the total amount of the money that he paid. So he paid 95,000 naira, and they told us that before this money he paid was after a discount of 5% has been given. So we know that we have Okechukwu, and because he received check, it's going to be recorded on the bank side, 95,000 naira. 5,000 naira. So if you add these two up, it will give you 100,000 naira. And if you deduct the 5,000 naira from the 100,000, which was the total amount that was supposed to be paid, you would get 95,000 naira. So the next is January 20. On January 20, they said he purchased second-hand car from Mazoma Motor by check, 100,000 naira. On January 20, he purchased second-hand car. So in this case, we need to identify if we are the giver or the receiver. And we know that when we purchase an item, we are expending money. And when we are expending money, we are the giver of cash in that case, and we will be credited. So we know that we purchased a car, and it will be recorded on the credit side. January 20. What did he purchase? A motor vehicle from Mazomaja for 100,000 naira. So we have the name of the person we bought the car from, who is Mazomaja. So just write Mazomaja on the particulars. And how much did he buy it? 100,000 naira under bank, because it was purchased by check. 100,000 naira. That is that for that. So on January 21, he paid check to Yakubu in full settlement of his account. They said he paid check. So for this also, we know that when we pay, money leaves us and in that case we are also the giver. And since we know that we are going to credit the giver, we can now come January 21, because we paid money to Yakubu 110,000, because we paid by check 110,000. So the next is on January 22, cash sales to Taribo received by cash. So we are the receiver in this case. They said cash sales. We sold goods to someone and he paid by cash. So it means that we are receiving money, and whenever we are the receiver, we will debit the account. So January 22, Taribo. Because we received money from Taribo, cash 25,000 naira. It will be recorded under cash as 25,000 naira. So quickly, the next is January 25, goods returned to Bamigbo 5,000 naira. We have established that whenever we have goods either returned outward or returned inward, it will be recorded in the either sales returns or purchases return book. So it means that goods returned to Bamigbo January 25, 5,000 naira will not be recorded in the cash book. In January 26, we have purchased goods on credit from Aminu at a trade discount of 10%. This will also not come to this account because we've also established that credit transactions don't appear in the cash book. Then we move to January 27. It said paid cash of 18,000 naira to Bamigbo after deduction of 10% discount. It means this money, we were given the 90% of the money. So it means this money that was paid is the 90% is 18,000 naira. If the 90% of what he paid is 18,000 naira, then we need to know what the 100% is to be able to identify what the discount, the amount the discount is. So the remaining 10% will be X. So if you cross multiply, you would get 20,000 naira. So the 20,000 naira will be what will be recorded as the discount. So we have January 27, Bamigbo. So he paid 18,000 naira cash and he was given 2,000 naira discount. So it means the total money he was supposed to pay was 20,000 naira, but he was given a 2,000 naira discount and he paid 18,000 naira. So the next year is January 29, where he said January 29 he received cash from Dauda in full settlement of his account, 130,000 naira. We have January 29. So because we know that whenever we are receiving money, it comes to the debit side. So we are debiting ourselves, and because it was Dauda who paid us, Dauda in full settlement of his account, he paid cash 130,000. So it's going to be recorded under cash as 130,000. So we move to the next, which is same January 29, where we received cash from Anthony 50,000 naira. So we know that because we are receiving money, and whenever we are the receiver in this case, it comes to the debit side. So we have January 29. Also, we received money from Anthony, and it was paid by check of 50,000 naira. So it means it comes to the bank side, 50,000 naira, and there was no discount, so the account is clear. So January 30, he said he deposited cash into bank, and we've established that this is a contra entry. So, and contra entries are recorded on both sides of the account. So because the money in this case is neither going out of the business nor coming in. So we have January 30. I hope you have written what we had earlier. So this January 30, he deposited cash, which will be recorded as cash on this side because it is a contra entry, and to identify that it's a contra entry we have C, and because it has been cash has been recorded as a particular, we have 80,000 naira under bank. So the next is on the credit side, January 30 also, because we have written cash on that side. Here it will be recorded as bank, contra entry, and under cash as 80,000 naira. We have on January 30, it said paid salaries by cash 5,000 naira. And in this case, we know that whenever we have money going out of the business in any form, we will record it on the credit side because we are the giver in this case. Money is leaving the business. So we have January 30 because we paid salaries. We paid salaries and it was by cash. So we record it under the cash side as 5,000 naira. So that is that. So we have January 31. He withdrew cash from bank to pay his son's school fees. In this case, he withdrew cash from the business, from bank, and he took it outside of the business. So it's an expenses on the part of the business. And whenever you expend money, in this case, the business is the giver. So we are giving out money. It's a drawings. The owner of the business took out money and he used it not for the purpose of the business, but for a purpose that was personal, which is his son's school fees. So it means that the business is giving out money and it will be recorded on the credit side. So January 31 to be recorded as drawings because he withdrew money from the bank, and it will be recorded as drawings. 3,000 naira under bank because he withdrew it from bank. 3,000 naira. Then on that same January 31, they said he paid Bashiru by check. He paid Bashiru by check 80,000 naira. So we know, because quite a number of times we've said it, that whenever we are giving out money, whenever we are making payments and money is leaving the business, it will be recorded on the credit side because we are the giver. So we are giving out money to Bashiru January 31 because Bashiru is the one receiving the money. Bashiru is the one receiving the money. So 80,000 naira by check because it is by check and check has to relate with bank. 80,000 naira. So this is all about the question. Question 2. Just take your time, listen well. Listen to all we've said, make your entries well. And one easy thing about this is that, or one interesting thing about it is that all these entries are what the examiner needs to see. Your addition, every of all the cash side and the bank side does not really carry any mark, but all of these entries are what your examiner wants to see. So if you can do this well perfectly, you will get all your marks. So the next question is number 3, and it says that the first one states that list the users of financial statements. So, and number 1, you need to understand what financial statements are. Financial statements are the final accounts of a business, so, or an entity. So when you are the accounts, who are those people that needs the accounts prepared by a business organization or an entity? Who are those people that they need it for a particular purpose or the other? Now, the number 1 person that needs that is the customers. The customers need these financial statements, the accounts. They want to see whether they can purchase from you or they cannot purchase from you. They just want to see, okay, are you doing well? For instance, banks, when they prepare their financial statement, maybe you use Zenith Bank. So now you check their financial statement. This company can liquidate anytime soon. So you don't want to be their customer because they can liquidate anytime soon. It means if you keep your money with them and they liquidate, your money goes. So customers are interested in the financial statements of any entity. Then the next one is the government. The government is also very keen on the financial statements of companies, essentially because of taxation purpose. Government wants to know whether a company is making loss or is making profit, so that they can know how much to tax them or how much to levy them as tax every year. So government is keen on knowing or is a user of financial statements of entities, because they want to know how much to be taxed on all companies. So creditors. The next one is creditors. Who are the creditors? Creditors are those people that we are owing money. In Yoruba, they will call them àwọn tá ń jẹ ní gbèsè. So when those people that we are owing get to see our financial statement, they get to know whether we have made profit or we have made loss. So in that case, they want to see if this company can pay back our debts or they cannot pay back our debts. So creditors are interested in the financial statements of entities in order to know whether they can get back what they have loaned them or they would not. So the next one is shareholders. Shareholders, they are major stakeholders in any entity. And why do they need the financial statement of the organization? They need the financial statement in order to see whether this entity has made profit or loss. And if they have made profit, how much will be my dividend? Because I own a share in this company, how much will be my dividend? How much will be my own part of the total profit of this entity? So they are interested. They want to know how the company is doing, how the entity is doing, so that they can know whether to withdraw their shares or to keep their shares or to sell their shares. Anyone. So shareholders are interested so that they can know when to opt out of the business or when to invest more into the business. And for the sake of this question, if you write the directors, you are correct. The directors are the ones that manage the entity. They are the ones that manage the business, the organization. So they are interested in the financial statement because they want to also know how the business is doing, the cash flow of the business, the profit of the business, the changes in equity of the business. They want to see how the business is faring per time, this year, last year, the year to come. They want to know how the business is faring. So because that is what really makes them to know whether they are performing or they are not performing. It measures the performance of the directors of the business. So they are also interested in the financial statements. That is the first part of the question. If you write these 5 for your examiner in the exam, you are correct and you will get your full mark. And the next question is, explain the characteristics of accounting information. You are just here, you are required to list and to explain, maybe just one line explanation. In the case of accounting examination questions, you don't need to write full notes. All you just need to see is that you understand what you have written. So the first characteristics of an accounting information is that it must be timely. It must be timely. That is, an accounting information must be from a particular time to a particular time. It must cover a particular period. So it must be timely. Accounting informations must, and that is why you see when you are preparing final accounts for the year ended, for the month, or as at a particular date. So it must be timely. Date must be attached to it. It must cover specific periods. So the next one is that it must be accurate. Accuracy is one of the very important features of accounting information because they are used by different people. They are used by these people. So if it is not accurate, it will give them a wrong perspective. It will give them a wrong perception about the business, about the entity. So it must be free of errors, totally free of errors. So that, because errors can mislead the users of that financial statement or accounting information. So it must be totally free from errors. And the next one is relevance. Relevance. Accounting information must be relevant. It must be helpful in making decisions. It must help these people. It must help them in making decisions. These people need it to make decisions. Customers need it to make decisions. Directors need it to make decisions on how to better the business. Shareholders need it to make decisions. Should I invest more in the business? Should I leave out? Should I keep my money? Or should I withdraw my money from the business? So it must be relevant. It must be totally helpful for making financial decisions. The next one is that it must be reliable. Reliability. Reliability. It must be reliable. Accounting information must be 100% reliable. So there must be no misstatements, errors. It must be there must be confidence in whatever. Confidence in it. Confidence. It must be reliable. The users of that accounting information must be able to have confidence in the accounting information that has been presented to them, so that they don't make decisions out of error. Then the next one is comparability. Comparability. In this case, it must be comparable, and that is why it can be linked with timeliness, because you must be able to compare the income of the business from last year to the income of the business of this year, or the income of the business from 3 years ago to the income of the business, so you can tell how the business is doing. So for instance, a business makes loss last year and it makes profits this year. You can tell that the business has improved. So it must be comparable, number one, to that of the company from previous years, and number two, to that of the maybe other companies in the same sector or in the same industry. So okay, MTN wants to know how good they are doing. How much was our profit last year? We made 750 million. Glo made 500 million. So they know, oh, we are doing better in this market than Glo or than MTN or than any other entity. That's what we are saying. It must be comparable. It must allow us to be able to compare, to see, okay, how well are we doing? How well have we been doing? How well have we improved from last year to this year, or from one business to another? That's the end of number 3.